So I get a lot of questions from you guys about credit scores and credit reports. You want to know exactly what they are, how they work, when they're checked, when they're important, if they're important. So that's what I want to do in this video, take you through all of that kind of stuff. And I'm going to start off with something which might surprise you. And that is the fact that credit scores and credit reports are different things. They're obviously connected, but we use these terms quite interchangeably. Also, you might throw in credit rating, credit file, credit history, all these different terms, using them, I think, on the whole, to talk about one thing, and that is the credit report itself, because that is the most important thing. So I'll get onto that in a second, but quickly let's explain what the credit score is and why it's probably not as important. So your credit score is a number, and you're probably familiar with this already. It's a number which reflects the information on the credit report. But this number is something that just you see. Nobody else sees that number. So really, it's probably most useful for you as a health check for the status of your credit report. If it's excellent, that means there's probably some really good things going on there. You don't have to worry about it too much. As it goes down those scales between good to average to poor, again, it's a good indicator that actually there's some actions that you need to take, some things that maybe you can do to bring that score up higher. And if you bring that score up higher, you're obviously improving that underlying information and data in your credit report. Or it could be just a sign that if it's low, that there's not much information there. If you have what's called a thin credit report, a thin credit file, there's very, very little data for a score to be based on. So again, it's a good indication just to take some action. So that's what a credit score is. And I'll explain a little bit more in a minute why there are 3 different credit scores as well, rather than just one. But that's that. The credit report, on the other hand, this is what is really important. This is the thing that is going to make a difference when you apply for any number of different financial products. Mortgages, loans, credit cards, bank accounts, even things you might not even be aware of, a mobile phone contract, a direct debit for your gas and energy bills, a direct debit for insurance. Although technically, if you can afford it, it's usually better to pay for insurance upfront over a year, a little bit cheaper. But all those things, the credit report is one of the biggest sources of information the lenders look at when they're making that decision whether they're going to give it to you. And it's not just that yes, no, will we let you have this product? It's kind of can be a bit more nuanced than that. It could be, will we give you 20 months 0% balance transfer credit card, or will we give you 12? If it's a credit limit, what size that credit limit would be. Again, the interest rate you might be offered could be better, could be worse. Size of your overdraft. Again, all these things could be impacted by the detail, the information in your credit report. So it's really, 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 really important that you do pay attention to it, that you do check it, you do look at it, you do try and find ways to improve it. Now, I will do another video looking at ways to improve it later on, but because today I really want to focus on exactly what it is, so you have that as a basis. So that's what they use. What's in the credit report? Okay, what's the information that they're going to use to make those decisions? Well, it's kind of a record of most of your big financial products. So again, those things that you used it when you're applying for stuff, it will have a record of your current accounts, your credit cards, any loans you've got or had, your mortgage, direct debits for your energy, your other things like that, your mobile phone contracts, all those kind of things will appear in there. There might all be some voluntary things that you've added in as well. There are some ways that you can sometimes add in your rent payments, for example. All that information will be there. It will have details for how long you've had those accounts, which actually can be quite important when they're making a decision. They like to see some longevity, some sort of stability in financial relationships. So how long you've had those accounts, how much money you might already owe on those accounts, how much money you owe relates to how much money you're able to access as well. They're all sort of things that come into play there. Your address history, that's in there as well, which can be really important because credit reports are also important when people want to try and check your identity. But again, having your address history based on those different products and based on the electoral roll, that's in there as well. Any links you have to another person, maybe you've had a joint bank account, a joint mortgage. If they have a relationship, a joint financial relationship with you, that will be recorded in there. And if that's one from the past that you haven't got rid of, that's still showing, again, that can be a bad sign for you. There's also information about maybe you've been bankrupt in the past. You had county court judgments against you. If you had any sort of debt insolvency measures to try and sort of clear that debt. If you are behind on your payments right now, if you've been late on payments or missed some repayments, all this information is there on that account. And you can look at this, or you can check it, and you can make sure it is accurate. The banks, the lenders, they would take all that stuff into account. So really, really important that your credit report information is as good as it can be, and you make those changes if you can to improve it, and hopefully you'll see that reflected in the credit score. Again, using that score to sort of check just how well you're doing in improving that score. And this is really important, and it's another reason why credit scores are kind of not as key, really. You shouldn't sort of put so much on them, because when a lender looks at your credit report and makes that decision, it's not the only thing they're looking at. They're going to have your application form, and that's going to have things on it like your salary, any other data that they've asked for, dependents, all this kind of stuff, mortgage repayment. There's loads of information that you will put in that form, right, which they will take into account. But they also might have existing data on you as a previous or customer from another time. Again, all that data, bring it all together. That gives them a bigger picture than just what's on the credit report. And so the credit score itself is only a reflection of part of the process. So to say you've got a good or excellent credit score doesn't guarantee you're going to get accepted, because the other information comes into play as well. Now, when lenders do have a look at your credit report along with that other information for an application, they perform what's called a hard credit check, a hard credit search. And this is basically means they're getting access to that data and using it to help them make a decision. Now, every time you make a application and have a hard credit check performed on your credit report, that then appears as well on there. So you'll see that, and also other lenders will see that as well. Now, you think that's not a problem, is it? Well, it can be, because they might not necessarily know what you applied for. Sometimes they can figure that out because they can see you've made an application, they can see a new product has appeared on there. But that won't happen every single time. And the more credit searches that are performed, hard credit searches that are performed on your credit report, the more these kind of marks that appear, the more it can sometimes look like you're desperate for credit, desperate to borrow money. And that might worry them a little bit. They might think, hang on, that's not quite what we want, the customer that we want using our product. So you have to be really, really careful when you get these credit searches performed. And that brings me to the next one, which is something called a soft credit check. Now, this is something which happens that doesn't appear on your credit report. And this is really fantastic, okay? Because this gives you that flexibility to shop around and search for different deals and find out your eligibility, your chance of getting something, without it potentially impacting your chance to get a deal somewhere else. So you'll see these soft credit searches on your report, but the lender won't. And at times this will often appear. Let's say you've gone to a comparison site for, could be a credit card, could be your insurance, your energy, whatever it might be. When they do that and tell you all your different options, a soft search has generally been performed, and there could be dozens and dozens and dozens of these appearing. Now, you don't have to worry. You'll see them on there, but like I say, the lender won't, so you don't have to worry. But again, helps you know what deal you'll get before you actually apply. Then when you do apply, that's when the actual hard search will appear. It's also a great way to do an eligibility checker for credit cards and overdraft, sometimes other sort of products. Again, know exactly what you might get, your chances of getting accepted before you apply. So this is a really, really important thing to take advantage of soft searches when you can, but also realize that doing that is not going to have an impact on your score. Now, the last point to make when we're explaining what credit reports and credit scores are is probably one of the most important as well. And that's there isn't a single report or a single score for you. There are in fact 3 different ones, and you have to check all of them. You can't just make sure that one of them is up to date and accurate. You can't just sort of be happy and let things go because you're scoring excellent on the first one you go to. Because the lenders, when they check a credit report, you don't know which one they're going to check. They might check one of them, might check 2 of them. It's very unlikely they'll check all 3. And if they check the information and the details on one where you haven't looked at it, and there is a big mistake or some missing information, well, that could mean you get rejected or get a worse deal than you were hoping for. So really important that you do check all 3 of them. Now, I've got a whole other video that you can look at that will take you through the 3 different credit reference agencies, Experian, Equifax, and TransUnion, and the 3 ways that you can check them for free. You don't have to pay to get your credit report. You can see it, check the information, and start taking that action if you want to, and look at those 3 different scores. The scores also, incidentally, I should say, are all completely different scales. So you can't compare them that one works better than the others. You have to sort of work within their own set kind of categories and sizes to know where you are doing, how you are doing on those. So there you go. Hopefully you found this useful. If you want to make sure you don't miss out on my future videos, not just those updates on credit reports and credit scores, but also all things personal finance, please do hit that subscribe button and the little notification bell that pops up next to it. And if you think this has helped you with your money, please leave me a comment below. Let me know your questions about credit reports so I can answer them in a future video. My name's Andy Webb. Thank you so much for watching. Until next time, cheers. And here are a couple more videos you might find interesting.